All right, so we're going to get started here. I think I've got about 35, 40 minutes. And what I'm going to be talking about today is what I call my 15-minute trading blueprint. I've been using this for nearly 20 years or so, still crushing it. The reason I'm sharing it with you today is because it's mechanical, it's simple, and the fact is I'm still using it to this day. Yes, I've gone and looked at all types of shiny objects, chasing holy grails, but this is a simple mechanical setup that continues to work regardless of the assets, time frames, your style, whatever it may be. Now, my name is Silas Peters. I'm the founder and head trader of Trades Trading. So let's go ahead and get right to it. As Dave mentioned, there is risk involved in trading. We know that there is risk in all types of trading and investing. Past performance is not necessarily indicative of future results. You must always consult with your tax or financial advisor before applying real risk capital, i.e. you can lose money in trading. Okay, now that we understand that, I'm going to ask you, I want this to be interactive. I'm going to ask you, what do you trade? What does everybody trade here? Do you trade stocks? Do you trade options, futures, Forex, maybe crypto? What is everybody up to? So I trade these actively. Whoops. I trade these actively. Let me get my pin. There we go. I trade stocks, options, futures, occasionally Forex. So regardless of what it is you trade, a lot of options traders in here, stocks and options, futures. And this, again, the amazing thing about this simple strategy is that it's a mechanical, stress-free, emotion-free trading method and can be applied literally on any market or time frame. So let's get right into it. What I'm going to share with you here is highly accurate, works in all markets, all time frames. It's 99% mechanical, perfect for small accounts. And again, most important, it's simple. So I've used this strategy with $2,000 accounts, $20,000 accounts, even $100,000 plus accounts. I've used it in every market situation, the 08 financial crisis, roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, you name it. From scalping to intraday trading for a few days and position trading for a few weeks and or months. And again, you can do this with small or large accounts if you wish. It can take as little as 15 minutes a week if you wish. Now, before we dive into exactly what this is, I'm going to introduce myself, who I am, and maybe why you should listen to me. Other than that, I'm a pretty simple dude. I'm a family man who thoroughly enjoys being a two-girl dad. I've got a strong passion for the markets, golf, cooking, the outdoors, and Alabama football. But this is where it all started, the great city of Chicago. It's here where I cut my teeth in the commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working the Asian, European, and early New York session trade desks, trading across the CBOT, the MERC, NYBOT, NYMEX, various London and Asian exchanges, trading for our hedge fund, banks, commodity trade advisors, trading and handling some enormous size. We're talking 300-lot bond orders, 400-lot big S&P orders, 100-lot gold option orders, 250-lot Japanese yen government bond orders. Such an eye-opening experience to see how the biggest traders, market makers, and funds were trading and making decisions. So I did this for a while, soaking up everything I could, any and everything market related, acquiring multiple futures and securities licenses. I was a sponge. But then my college sweetheart, and now my wife of 20 years, taught me to come home to settle down and start a family. So we headed back down south. I immersed myself into the quieter side of finance, where I helped manage equity and fixed income portfolios in this class building. Then I went on and did some investment consulting for a private family, $2.5 billion family office. And then during this journey, I managed to stay in the market, specifically the commodity markets, running and owning some brokerage units. And then I finally started my publishing brand in 2016. And it's here where I found my real calling. It's here where I teach students across the globe different ways they can generate the skills necessary to trade, to manage portfolios, and turn their trading around in the right direction. And today I want to help you too, but I really want to quickly go back to the journey. It wasn't always easy. There was a learning curve. several obstacles and hurdles on the path to where I am today. The first step, obviously, learning. School cannot teach real life experience in the markets. In the beginning, I made money, made a substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account, several others, in what I like to call revenge trading. And these were extremely humbling experiences. I almost gave up, almost quit. Nothing seemed to work. I always seemed to be on the wrong side. But guess what got me back in the game? Remember, I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago. And I got back on track and I started banking wins again. Remember, I'd gone off the reservation looking for that elusive holy grail, but my journey ultimately led me back to where I had first started. So I went back to my roots, started to work my repeatable process to find overall consistency. Now, I'm going to ask you this. Who here is a victim of paralysis analysis? Who's been a victim or has been a victim or is a victim right now? I'm raising my hand. I think we've all been there, done that, have the t-shirt. And what I want to do today is maintain a theme, is that we are going to simplify our process. Okay, we know, trading is not easy, but it can be simple. And once I share with you what I have in store for you today, I think it will be self-liberating. And so my agenda and promise to you is this, that we're going to learn a simple and mechanical setup that is repeatable regardless of the market or time frame. Now, let me paint a quick picture. Everybody knows that a market doesn't go straight up or straight down forever. They go up and down in waves or certain time frames. And literally trillions of dollars have been made by smart traders by recognizing these trends. And at the same time, trillions have been lost by those who think they knew what they were looking at and got it wrong. And so right now, let me show you how to get on the right side of these moves. What we're going to talk about today, I'm going to walk you through the process of how to find moves like this right here in advance. Now, it doesn't really maybe look sexy. We're talking, 10% moves, 8% moves, 12% moves. When you turn into some penny stock newsletter, they talk about 8,000% gains. Hey, I'll give you that. But these start to add up. We're talking $1,100 on 100 shares, $600 on 100 shares, $2,000 on 5 option contracts. They start to add up. Same thing here. I'm going to show you how to identify this sell, these buys here, all in advance before they happen. 3.5%, 6%, 9%. It's a rinse and repeat, guys. We're trading the ebbs and the flows of the market. Lockheed Martin, I'm going to show you how to identify this, and how to identify this with stops and targets before they actually happen, okay? Now, futures. This is a 30-minute chart of gold futures. This is an $800 per contract move. This is a $450 per contract move. This is a 5-minute chart of the E-mini S&P. You've got 3 points, you've got 8 points, you've got 6 points, 10 points. It's over $1,300 a single contract in a single session. So I'm hoping that you start to see the potential, because all we're doing is trading price action. Those that like a little bit more activity, 610 tick chart on the 30-year bonds. Here we have 4 ticks, plus 4 ticks, plus 7 ticks. That's $218 on a single contract in a single session. Who would be happy with $218 a day, or $500 a day, or $1,000 a day? I mean, we would take that, right? And so this pattern that you're going to learn is responsible for identifying those moves before they happen, and also lets you know precisely when to get out. Now, what I showed you, you're probably asking, can it be that simple? Well, we know trading is not easy. It's not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff: indicators, red light, green light systems, Greeks, alert services, robots. Most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos, indicators, I started focusing on pure price action. Pure price action led me to seeing one simple pattern over and over again. And guess what? That is when it clicked. It all started clicking. And so if you're sitting here as a new trader or a struggling trader, or maybe even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anyone can learn. And I truly believe that this is something that you will keep in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. I'm going to show you how you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we're going to be discussing today is, drum roll please, the 1, 2, 3 pattern. So who here is familiar with the 1, 2, 3 pattern? And this is one of the most fundamental technical patterns in the textbooks. We're talking technical analysis 101, but I mean highly and highly overlooked by most traders. Now, let's break this down. The setup is price action based. And guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on and on until they find the perfect location for a new store. Burger King does it or approaches it a little differently. They wait to see where McDonald's opens up a store, and they open one up across the street. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the large Wall Street traders and institutions do all of the research on which markets to buy or sell. All we have to do is look at price action, which takes into account all their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, the setup is price action based. The pattern is comprised of a low, a higher high, and a higher low, and a break of that higher high when we're going long. Same rules apply, but inverse of short. Anticipates a change in trend from up to down on a break below the 2 or B point, and anticipates a change in trend from down to up on a break above the 2 or B point. Now, the strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can be found within a trading range, and I will say it works extremely well when the pattern sets up at significant areas of support and resistance, head and shoulders tops, bottoms, supply and demand, double tops, bottoms, and more. So let's take a look at the basic mechanics. Let's start with identifying the 1, 2, 3 bottoms. So we use or look for 1, 2, 3 bottoms when we are bullish. We're looking to go long, which means we're looking to buy that stock, buy call options, sell bull puts, expecting it to go higher. So as the market trades lower, finds that lowest low and finds support, that's our number 1. As the market retraces higher and pulls back down, that gives us our number 2. And as the market trades down and stops printing these higher lows, that gives us our number 3. So 1, 2, 3 bottom traders are looking to go long on breaks or closes above the number 2. Now, we use 1, 2, 3 tops, same rules apply, just the opposite when we are bearish or looking to go short, expecting that market to go lower. So we're looking to sell the stock, buy put options, or sell bear calls, okay? Same rules again. Market trades higher. Once we stop printing that last high, that gives us our number 1. Market retraces lower, pulls back up, that gives us our number 2. As we stop printing these lower highs and retrace down, that gives us our number 3. 1, 2, 3 top traders are looking to get short on breaks or closes below the number 2. One of the great things about these setups is you don't really have to be concerned or worry about those first 2 legs. We don't need to be glued to our screen all day long, unless you maybe are hyper scalping. All we need to do for these setups is spot when it's about to go past the number 2 point. It's that simple. Now, let's not waste any time because, as they say, seeing is believing. Let's look at some examples here. Now, this is a 1, 2, 3 pattern on the Aussie dollar futures. Now, if you don't trade futures, you could look at FXA, the ETF. Forex traders could look at Aussie USD, and you're going to see the exact same pattern, okay, guys? And so what we're looking for is a new high. Now, this says 52-week high. That's not an absolute rule, nothing set in stone there. We're using that for example. We'll talk about ways later how you could dial that back in to find more opportunities. But for these example purposes, 52-week high, okay? So we have a big red circle. Why? That's a 52-week high. That gives us our starting or our baseline. Market trades lower, retraces back up, and then back down. We have a 1, 2, 3. Now, this market could have traded up as high as here, as long as we didn't take out that number 1 high, but we stop right there. Now, we already know about 98% of the recipe, right? We know that we're looking at short on breaks or closes below the number 2, but what about the other important ingredients, such as, well, where's my risk? Where's my limit? Where am I taking profits? All very, very good questions. Our initial risk starts above the high of the number 1, okay? Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So you can see it's a 1-to-1 reward versus risk off the bat. That's okay, but we can do better, okay? It's very important, though, to let the market materialize in your anticipated direction, okay? And once we start breaking down below these swing lows, we can then move our stop from the number 1 high to above the number 3 high. So we quickly cut our risk down here by what, 50, 60, 70, some odd percent. And then we come down and reach target objective. Let's look at another one here. 1, 2, 3 top on Walmart. We have a 52-week high. That are a new number 1 point. That's a new high. Okay, market trades down, comes back up. We have a 1, 2, 3. We now know what 98% of other traders out there are struggling with. What is that? Well, where am I going to get in? Where's my stop? Where am I taking profits? Well, we know we're looking to get short on breaks or closes below the number 2. We know initial risk is going above the high of the 1. We know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. Okay, and that's about $5 in this example. And we hit target. Let's look at 1, 2, 3 bottom examples. Same rules apply, same setup, but just inverse. So here we have a 15-minute chart of the E-mini S&P, okay? 15-minute chart. And I say, well, hang on. Does it make sense? Does it make sense to look for 52-week highs or lows on an intraday chart, such as a 1 minute or a 5 minute or 10? No. So on an intraday chart, we're looking for what's called session highs or session lows. So if you start your day in the, say, 3 a.m. European session, maybe the 9:30 a.m. New York cash open, maybe the last hour of the day, you are simply waiting and watching for new highs or new lows, okay? And that's what we get. This is a new session low. So let's talk about a couple of entries here. Let's talk about a couple of entry options. So aggressive traders can work a buy stop, a tick or two above the number 2 high, and you get triggered into the trade. An alternative method that I like is to wait for the market to come back and retest, or come back in what I call a second pass or a hook above the number 2, okay? So sometimes the market will zip up and blast you and hit target, leave you at the train station, no problem. There's always, and there's plenty of other opportunities. But what can happen is I like to wait for this confirmation, because sometimes the market will bust up above the number 2 and then come back down and stop you out. this second confirmation can add a little bit more of a conservative entry method for you. Now let's look at a 1, 2, 3 bottom on a weekly chart. This is a hell of a way to catch some longer term position type moves. So here we have a multi-week low. We also have a double bottom. We have a 1, 2, 3. Market breaks above the number 2 here on this large bullish candle. We go sideways for 4 or 5 weeks. We come back, retrace, and it'll hook back above. That's our confirmation to get long Apple. How? Well, we can buy Apple stock. We can buy calls, call debit spreads, sell bull put spreads, whatever your flavor or style may be. Now, let's talk about failed trades. They don't work. Hate to burst your bubble. We're all grown-ups here, big boys and girls. We know there's no holy grail in trading or in life, okay? And so this is probably a trade I took in my live account. Market comes up, makes a new session high. Market is vertical, breaks trend line. We have a 1, 2, 3. Aggressive traders get short on the break below the number 2. If you waited for the second pass or hook, you get short here. Now you're up maybe 2 or 3 points. Now, if you exercise any type of money management, as the market retraced up, you're stopped out above the number 3 high. If you sat on your hands and didn't do anything, that's okay. You're stopped out above the number 1 high right here. Guess what? We actually have a new setup. This high is greater than that high, so we actually get a new 1, 2, 3 top pattern. Market breaks down, ends up being a profitable trade. Now, this is an example of a no trigger or voided trade. And I'm going to tell you why I like these setups, okay? So what is happening here? We have a 1, 2, 3. We're looking to go long here, but the market starts to break down, takes out that number 1 low, says, I'm going to go lower. So we get a new 1, 2, 3 pattern, okay? Looking to go long here. Market says, nope, I'm going to keep breaking down. We take out that number 1 low. We start to count over. Here we have a new 1, 2, 3. This time we get triggered into the trade. Does anybody want to take a guess on what may be happening right now? What is happening right now? Anybody want to take a guess? You get a gold star on your crown. So we've got price making what? Lower lows, lower lows, lower lows. If we put on an oscillator, such as a stochastics MACD RSI, that's doing this, what is that called? Your price is making lower lows, our oscillator is making higher lows. That is called bullish divergence. And so that is a little secret trick to add some special sauce to an already high probability idea. 1, 2, 3 pattern trade management. Confirmation of entry is on a break above the 2 B point for a long or a break below the 2 B point for a short. Exit strategies, I'd say go for the distance between the 1 and 2. Let me tell you what that means. We have a 1, 2, 3 pattern, right? Okay, let's say this. And we know we're looking to get long here. And we know our first target is here. If you're only trading one contract, one option, one share of stock, one futures, whatever, I say go for the distance between that 1 and 2 point, okay, at equal distance. Because it's uncanny how more often than not, it will come tag that and often reverse. Now, if you're trading, multiple shares, multiple lots, whatever it is you're doing, I'd say, hey, take a third, half, 2/3 off here, jack your stop to break even and let it ride. And then you can trail your stop however you wish, right? They come a dime a dozen, Parsar, moving averages, 2-3 bar candle stop. I like to use good old-fashioned supply and demand zones or price action, history in the charts, okay? Now, I've shown you this setup works on any market, whether it's pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, and the Polish zloty. I've also showed you that it works on any time frame, whether you're a tick trader, a 1 minute, 5 minute, hourly, daily, weekly, monthly, whatever time frame you may use, and on any trading style. So what is your trading style? Do you trade, are you a position trader, swing trader? Are you a scalper, day trader, tick trader? Let me see in the chat, what is everybody's trading style here? Okay, scalper, day, swing a day, weekly options. And the reason I always like to ask that is because you've got to determine what your bread and butter is. I'm not here to say this only works on a 5-minute chart of 30-year bonds, or this only works on a daily chart of Alibaba. It's not true. We're trading price action at the end of the day. Now, these are some of my favorite time frames right here. I also like the 1 and 2 minute chart. For 1 and 2 minute chart, 5 and 10 are great. The hourly and 4 hour are I love, and the daily. These are my bread and butter. You've got to find out what works for you, because some of us may not be able to have the commitment during the day. Some of you don't want to trade in the middle of the day. That's fine. I got started looking at end of day charts at night, and it worked perfectly for myself. Okay, so let's look at some more real trade examples. Not to say what I share with you are fake examples that are real by all means, but let's look at some examples we've utilized in some of our services. Okay, so this is a daily chart of crude oil, and if you want to look at, you can compare this to USO or other energy stocks, ETFs. We're looking at the same exact thing, guys. We're looking at price action. And so what I want to do is work myself from left to right, and you guys and gals can read all this stuff on the right-hand side. But what we're looking for is a new high, okay? That gives us our number one starting point, okay? We have a 1, 2, 3. So once we've identified a 1, 2, 3, we know pretty much everything in advance. We know where we're looking to get in, we know where our risk is, and we know where our targets are all in advance. Market sells off, hits our $3,000 per contract price objective. People ask me all the time, does this work in sideways or consolidating markets? Well, the answer is yes. I have a 1, 2, 3 right here. Market, it's a nice looking trade. I'm only looking for new highs or new lows, okay? You can trade range bound and consolidation. We have a new setup. This high is greater than this high. 1, 2, 3. Trend line break. We break below the number 2. We've got 3 or 4 days, in case we missed the first one, 3 or 4 days to get in. Now, this is what I call the perfect marriage in trading. When we have a 1, 2, 3 top, aligned with a period of the calendar year where seasonality suggests that energies and crude oil tend to trade to the downside, those are the opportunities I love, okay? And so those things were aligning right here. We got short. We come down, we hit our $4,000 per contract price objective, stops go to break even. We have a free ride. We're trailing the market until we either get stopped out or we get a reversal. Market comes down, we sell off another $10,000 per contract, guys. Come down, we get a potential setup here, potential 1, 2, 3 here, never break above the number 2, sells off another $10,000 per contract. We finally get a flush low here, 1, 2, 3. There's our entry confirmation, hits our $5 per contract price objective. Let's look at gold. Now, this is actually GLD, the ETF. Here we have it, 1, 2, 3. Market breaks down, reaches our $4 per contract price objective, new low. So I don't care about my Chinese gold stock penny newsletter, okay? I'm looking at price action. 1, 2, 3. We break above, we come back and retest, hit our $2 per contract price objective. Now, you say, what about all this in the middle? Well, if you want to trade the 1, 2, 3 here and the 1, 2, 3 here, you can do that. Those are good trades. I'm only looking for new highs or new lows. We start to get new lows. You see this right here? These are new lows. So we get new 1 points, new ones. Finally get a 1, 2 there. This little guy gaps down, takes out that low. So that's our new 1, 2, 3. Gap higher 2 days in a row. We come back, retest, hook back up. That's our confirmation to get long gold, gold futures, GLD, calls, sell bull puts, whatever flavor or style it may be. Delta Airlines. I know this is becoming redundant. I'm just trying to hit home the fact about how repeatable this process is, guys. Here we have a 1, 2, 3. Gap up, retest. We can buy Delta stock. We can buy call debit spread, sell bull puts. New high, 1, 2, 3. This one gaps down. I don't really chase the gaps, but we've got members and students that will buy puts aggressively there. We get another opportunity. This high, higher than that high, 1, 2, 3. Again, another sell-off here below the number 2. Small retracement, $8 move, new lows. Means do 1, 2, 3, break above. We trade higher. We come back, retest, hook back up, $8 higher. Forex traders in the CAD, Swissy, Canadian dollar, Swiss franc. 1, 2, 3. Multi-session low on a 4-hour chart. Aggressive traders getting long here. Conservative traders waiting for the comeback, the retest and hook back up. 70 pick profit objective. What are you doing? Not doing anything. You're waiting for a new setup. Potential 1, 2, nope. Potential 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, nope. Finally get a 1, 2, 3 here. Break below, we come back up, we hook back down, we reach our 40 pip profit objective. Any day traders in here? Any day traders, of course. So new session low, that's the new number 1 point. 1, 2, 3, we break above, we come down, we hook back up. There's our long, we hit our 13-point profit objective. It happens to be a new session high, which means a new number 1 starting point. 1, 2, 3, we break below, trade sideways, we have to pop some toms, and then boom, collapse, reaches our 20-point profit objective. New session low, 1, 2, 3, we break above. If you're lucky enough to get long in the retest, you're filled on your 30-point profit objective in about 2 or 3 bars. And here is what that looks like. This is a 5-minute chart. 137 ticks, 60 ticks, 91 ticks. So I'm going to ask you, why are you here? You're here to learn a mechanical done-for-you strategy for all markets and all time frames. Have I accomplished my job, right? Have I accomplished my job? There's no guessing where to get in, no guessing where the market is likely headed, no guessing where to get out. If we had 100 traders looking at the same chart, we should have 99 seeing the same thing, right? There's no need to create or turn this into rocket surgery. We want to keep things simple. But wait, there's more. The one weakness or drawback of these setups is that there are many of them. How do you catch them all without spending hours in front of your computer? What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the strategy and the trigger and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there's a penny setup? I don't know about you, but I would freaking love that. I like efficiency, time savers, technology that can find high probability ideas. So you remember those examples from earlier? This is the crude oil example. 1, 2, 3. Once we break below that number 2, we get a chevron here that will plot these beautiful lines. This is your breakout or entry level. This is your risk. This is target 1 and target 2. Target 1 is the distance between the high of the 1, measured to the low of the 2, measured down here. And then target 2 is 2 times the distance to target 1. And the quick eye will notice all these little green arrows. Why the heck are we seeing those? These are new lows. We're starting a new count. 1, 2, 3. We never break above. 1, 2, 3. We never break above. That's why we don't get any plots, okay? We finally get that last setup there. 1, 2, 3. There you go. Target 1 and target 2. Here's that example in gold. There's your long. There's your long. There's your example in delta, long, short, short, long, all plotted for you in advance. Here we break below target 1, target 2, hits target 2 to the tick, happens to be a session low, gives us a new 1, 2, 3. We come up, we hit target 1. We don't quite hit target 2, close enough for government work. We go sideways. So before you ask, does it work in sideways in consolidated markets? Yeah, because it's not going to print any signals unless we make new highs or new lows. This low is lower than this low. We have a 1, 2, 3. We just nipped this little head there above the number 2. We come down, we come up, we hit target 1. Notice as we're waiting for target 2, we're getting new arrows. It's giving us a clue that we may need to get ready to reverse. There it is. We come down, we come up, we hook back down, we hit target 1, target 2, and we actually make new lows, which starts a new count for us, okay? So is this training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, If you're an experienced trader and want to add another arrow to your quiver, if you're tired of all the noise we talked about, if you want to simplify your process, maybe you're already successful, but add another strategy. If you need a specific step-by-step plan that you can do part-time, then this training might be for you. This system will find and plot setups like this in Holly Frontier. Find and plot setups like this in Google. Find and plot setups like this in the Canadian dollar. Find and plot setups like this, a 203 tick chart for those that like to scout. Why do all the work? We let technology do it for us. This is a scanner that I've got running here in Thinkorswim. Here we have the indicator component and scanner in TradeStation, indicator scanner component in Ninja, indicator only for TradingView, indicator only for TradingView. We have an indicator and scanner for MetaTrader 4 and an indicator scanner for wealth charts and even for MetaStock. I mean, look how clean these setups are, guys. Provide you the entry, provide you with target, provide you with risk. You want something to help you take the discretion out of what you're doing. This is precisely what that does. Now, we know there's no real crystal ball in the markets, but I like to view this as one that gives me the technology to scan the markets, locate the setup, go to the entry and manage the trade through the exit. And you can start doing so today with what we call the 3S code. Now, here's the offer you simply cannot refuse. All this programming, coding, software costs well into the 5 figures. We're talking 7 platforms, 7 different coding requirements, hundreds of hours of testing. But I realize the $3,000 price tag is way out of reach for most folks, even $2,000, hell, even $1,000. So I truly mean this when I say I want you to be able to start on the right foot right now with a proven mechanical, no BS, no guessing, straightforward setup that you can take and use for the rest of your trading career. So we've made this absolutely and completely affordable today. For those that are willing to take action, you can get in right now today. First 25 slots, you're going to get the indicator for 7 platforms, the scanner for 6, 3S Code Optimizer, weekly strategy and scan sessions, access to our private Telegram room, all of our quick start guides and bonuses for a one-time lifetime fee of $397. You go to tradetrending.net/code. You can scan the QR code here. You can even call 502-383-1182. I want to make it 100% crystal clear that you understand what you're getting. You get the indicator and scanner for the following platforms: Thinkorswim, TradeStation, Ninja 8, MT4, Wealth Charts, MetaStock, the indicator only for TradingView due to limitations of the software. We've offered a PayPal solution for those that like to finance or purchase through PayPal. You see that on the blue button on the order form, tradetrending.net/code. Now, you're also going to get access to our weekly strategy and scan sessions. This is where we meet every Thursday. What's today? Wednesday. We're meeting tomorrow at 11 a.m. Eastern. They're all recorded for your viewing pleasure and convenience. The indicator scanner, totally customizable if you want to scan for setups only, trigger only, or both. Scan for tops, bottoms. You want to scan for stocks, futures, ETFs, both, any or all. Change the colors, all that good stuff. Now, we know that back testing can help lead to more profits. The optimizer is another tool that can help you progress in your trading. We've had the optimizer built for Thinkorswim. You can see me running this here across crude oil. This is the optimizer in TradingView. You can see I'm running this on the British pound. Here it is in TradeStation, where you get all of your stats and data. NinjaTrader, all of your stats and data right here in a nice, clean dashboard. 3S code package, I'm also including additional bonuses, my chart principle trading manual and guide. This is going to help jumpstart you teaching how the market works, why markets move the way they do, who the players are, how to look at and understand the market the proper way, and how we use the power of seasonality to trade the 1, 2, 3 pattern. You're also going to get my 25 top option strategy guide. I include this because I believe options are a very powerful trading instrument if you know how to use them properly. Bonus 3 is access to our private Telegram room. Lifetime access. Every single day, I'm providing an idea for you across the following markets here. You're going to get lifetime access folks have paid for their indicator many times over just by utilizing some of these setups, like we shared here, like we shared here, like we shared here, and also here. And bottom line is, people are taking action. That's the only way that you're going to find success, is if you take action. And these come in all the time. I'm extremely humbled. And this is what makes it worth it. People are they're learning and understanding the methodology, they're taking action, and they're seeing success. So here's how you can get started, guys. You go to tradestraining.net/code. You can scan the QR code 502-383-1182. I'm sorry, I felt like I was rushing through this, but I really wanted to show you this incredible package. This is a one-time fee, guys. One time. There's no renewals. There's no shenanigans. One-time fee. You can load it on multiple platforms. I know several of you use multiple platforms. We have white glove concierge installation service if you need to speak to a human being and have it installed. And we are with you the entire way. So Dave, I want to thank you and the Festival Traders team for having me on.